Okay, we're going to go live in 3, 2, 1. Recording. We're live. We're live.
Yes.
All right. Welcome to G Money, everything real estate, everything mortgages and real estate. I'm here. I'm Greg Abrams, and I'm here with Irene Henry with State Farm. Welcome, Irene.
Thank you. I'm so happy to be here.
Have you done a podcast before?
No, I've done some interviews, but not a podcast.
Okay, cool. One, of course, we want to have you on here, but then timing couldn't be better with just everything that's going on with insurance, which we're going to talk about today.
Very true. A lot in the insurance market across the U.S. and in California.
Yes. But before we get there, we've got to do a little introduction, and you gave me a little bio, and I'm not going to read it word for word, but what I love is finding things out about people that you've known a long time. So you grew up outside of Chicago.
Correct.
And you went to school to become an attorney?
That's correct.
All right, come on, elaborate on these things.
Okay, childhood dream. When I was a little kid, and one of the mentors in my life was my mom's father, my grandfather, Jesus. He was the father of 10 kids, and he was a hard worker, and he did everything in the community and always went to assist the underdog and be the protector. And I also said, I'd like to be the first female president of the United States. And so I researched that, and I realized most of the presidents of the United States had been attorneys.
Sure.
So I said, that's my stepping stone. I always knew I'd go to college, but so at 8 years old, I had said, I'm going to become an attorney so I can then take the next step and become the first female president of the U.S. And I just felt always about protecting and defending the little guy.
Yeah.
That just was my inspiration.
And that is very much you. I mean, how I know you and just,
you.
always looking out for others and very philanthropic. I mean, through and through, that's definitely how I know you. But did you ever practice law?
Yes and no. The third year when I was in law school, I worked with an attorney Lucia Tebby, who was the guardian ad litem for Ventura County. And I had worked in her law offices, and I could rep because I got a bar. You can get a bar card and go to court. So, but after I got my Juris Doctorate, and even while I was in law school, State Farm came up to me and said, we've heard so many good things about you. And I say this very humbly because I worked with other State Farm agents on their teams during that time while I was in law school. And they said, we think you'd make a great State Farm agent. And I did that while I was in college too, back in Illinois. And I was like, in law school, what's wrong with you people? And so they said they were after me, which again is a compliment to me. And I'm saying that humbly. Generally, State Farm doesn't go out. People come to State Farm to become an agent. They don't necessarily go after you and knock your door down.
Yeah.
And so they were after me for about 6 months. So when King graduated, and I said, okay, I'll give it a go. I took and passed all their tests, and then I said, okay, I've decided to become a State Farm agent. One of the things, law is a lot of tedious work, and it's not necessarily what you get on the Hollywood version. And I said, and I liked what State Farm does as a good neighbor. We're not just insurance agents and or professionals, risk professionals. A lot of us do things in our community, both locally and as you know, Greg, we've done things together through Rotary. We went to build houses in Mexico in a day. So we don't just do things in our own sandbox. We have often done things internationally.
Right.
And being a State Farm agent has afforded me the opportunity, as being self-employed like yourself, to do some of these things that we might not have been able to do otherwise. So I said, you know what?
Well, I was just taken aback. I didn't know you were from Chicago. So when did you migrate out west? I moved here to go to law school. Okay.
So 85. Yes.
Okay.
Yeah. Mm-hmm.
And then today, although you're not an attorney or practicing attorney, you're married to one.
Yes, I am married to an attorney. I do have a Juris Doctorate, so from now on it's Dr. Henry U.
Of course, I got it.
Yes, and Tim does practice law.
Yeah, so it's all coming full circle to me. I get it now. That's great. And then State Farm, and as I was researching, just knowing that we were going to sit down together, I was like, well, let's look up facts about State Farm. And I got overwhelmed. I got to tell you, it was like, what's the top 10 biggest? Well, then they had like all of the whole world, and State Farm is in there. And then what's the top 10 auto insurers? And they're in there. Like everywhere I cut it, State Farm is in the top in terms of size and writing policies and assets. And I mean, you name it, State Farm is definitely a conglomerate that does all kinds of stuff very well. And
Thank you.
looking into the products that you offer, it's not just auto. I mean, from your website, auto, home, condo, renters, personal articles, business, life, health, pet.
Correct.
Did I miss anything?
Yeah, it's kind of interesting. People think just auto, but we've grown over the 100+ years. So we have over like 86 products that are out there.
Wow.
Plus our affiliations. You mentioned pet insurance. We do that through Trupania, but we also have an affiliation with U.S. Bank. So we're more than what we started out back in the cornfields of Illinois.
Yeah. And it appears that all of the top banks, the top insurance companies, I mean, they're not just new kids on the block. They've been around 100+ years.
Correct.
And
Yes.
State Farm is definitely out there, and their branding is out there. I mean, I don't know if you have to live in a corner to not know who they are.
I'd say not to know who Jake is. He's very popular. I bring him to high school things. We also did the Ought To run at Channel Islands last year, and everybody wants a picture. We just did the Ronald McDonald thing, and when we brought him last year to celebrate our 100th year, everybody wanted to get a picture with Jake for a cutout. He's very popular.
Well, the irony here is I do have a close friend. Shout out to Jake Anderson.
Oh.
I'm not the greatest at, when I first meet somebody, their names. So it's like I have to affiliate it with something.
Right.
He's still in my phone as Jake State Farm.
We appreciate that. I'm sure that's cute.
Oh my goodness. Yes. So, I mean, again, kind of how I got to know you. I mean, first and foremost is, philanthropically of, through Rotary, but not just Rotary. I mean, so many other things that you're involved with. Seems like, how do you have time for anything else? Share some of the things that you've been involved with. I mean, Rotary, past president, multiple times.
Been a past president once, and then the other philanthropic things that we've been involved in over the years, Boys and Girls Club board president in Santa Barbara for 2 consecutive years. We ran $1 million capital campaign to get the money to purchase a club on the west side in Santa Barbara. We've worked with Special Olympics. We've worked with the American Red Cross. We've worked with various nonprofits across the board. And then an offshoot from Rotary, as you're aware, is Rotaract, which is like the middle 18 to 40-year-olds. And then there's Interact, which is the high school thing. And that's that's one of my passions. Yeah. I love working with the youth. So it's our community service youth, and they do anything from cleaning the beaches. They put on a Valentine's Day dance at Ventura High School. It's one of their signature events. They started it about 20 years ago. So it's our special needs kids. It's a prom dance at Valentine's, and they put the whole thing on for the kids. And it just, you walk in there and you just feel this positive energy. They do drives for food share. They do a coat drive that ties up with Rotary. We recently, like I said, they volunteered their time for the Ronald McDonald Walk. And your lovely partner and wife, Sarah, actually has been one of our guest speakers for her nonprofit, Love Ventura. Mm-hmm. And we volunteered. A lot of times we coordinate to put boots on the ground for other nonprofits to be part of the community service. Right. So it's a little bit of everything. That I will say, my other passion is I did coach girls volleyball between Holy Cross School and Villanova for about 10 years, girls. And I loved that opportunity to be able to coach, whether it's in a business or sports. And consequently, my daughter, I have to brag about Morgan for a little bit.
Yes,
she's quite not because of me, but she's quite the volleyball player. Yeah, till this day.
I feel like Sarah and I have something to do all the time, and I don't think we ever sit down. And listening to you, I think we're outpaced tenfold here.
Not hardly, no.
Well, I mean, it's great. And here's what I can always say, just, giving back of anything. And I see you're sincere. What you do is for the right reasons. Then you get to help people. Then you get to kind of selfishly self-gratify yourself of, hey, I'm giving to somebody else and I'm helping them. And then there's this outlier of you meet so many new people and so many who's who in the community, and then it kind of comes full circle that they want to do business with you. And it's just, I don't know, I get into these circles and it's like I meet people in 10 different ways.
I agree.
And you're one of those that I know it 10 different ways, you know.
Oh.
So it's very neat to see. I love it.
I believe, again, that's why we're personally and professionally connected. You guys are part of the same tribe family to us. I mean, you've been to my home. I've
Yes.
been to your home. And we do that because this is our planet for the future of
Right.
your daughters, for futures to be, and how to make that place just a little bit better. So,
And that's it. Just a little bit better here and there. It goes a long way, and you compound that with 10 people, 20 people, and it gets a lot better.
exactly.
And I still have hope in humanity. There's still
Me
a lot of good
too.
people out there, right?
Yeah, I know. I haven't lost it yet.
Okay, good. So before we get into the craziness of all the homeowners insurance, is there any other insurance or products that you kind of want to chat about, of, you know, things that, you know, you like pet insurance or, you know, renter's insurance, auto insurance, you know, anything that you kind of want to chat about?
My passion, my passion is life insurance.
Okay.
I bought a life insurance policy when I was only 16 years old. Now, how many 16-year-olds go buy life
None.
insurance?
You.
And the reason I did is my mom was raising 4 of us on her own. My father was gone when I was 8 years old, thereabouts, and I always felt that, and I was working probably as early as 12, babysitting and working a little farmer's market type of thing, that if my mom wasn't on the planet, this way she could have some money, $25,000. And I started out with a universal life, something with savings on it. And because your house may never catch on fire, you may never have an auto accident, but one of these days you're not going to be on the planet. And so it's better to face that in a pragmatic manner and going, it's kind of like going to law school. I want to go to law school. How does that happen? Got to finish high school, then you got to go to college. You know, it's a process, it's a recipe. And so I think people too often overlook a reality, which is not being on the planet anymore, and then how to protect your loved ones. And life insurance is the one claim that will happen for sure, and you should not ignore that at all. I actually did I want to say it's Life Achievements, but don't quote me on that, where it's a nonprofit organization, and they videoed, because we had this death claim here in Ventura. Was a local contractor downtown when they reconstructed everything downtown in the office that I was originally on Main Street. He was a general contractor down there, and he had 3 kids and a stay-at-home wife. And I went to him, I said, Nicholas, not only do you need life insurance because you're self-employed, but you should have some on your wife. And he's like, no, just for me. She doesn't need any money. And I said, well, you have 3 kids under the age of 12. They're at home. And if something were to happen to you, who's going to take care of those 3 kids?
Right.
Well, regrettably, she died in a car accident, and he was injured. He was in a neck brace for several months and lost part of his fingers. It was, and the tragedy that he lost overnight, his kids became motherless. And I mean, they called this from the hospital. The point is, he did have life insurance. He actually listened, and they had a good amount to be able to keep the roof over their head, food on the table, and him not being able to work for at least a year. So to me, and getting a policy actually that has cash value accumulation, it's better to have something which is term. It's like renting, and you're familiar with the real estate. You're not going to get any equity, but at least you have a roof over your head. But it's good to move towards ownership at some point, and that's what a whole life or universal life does for you. Gives you cash value.
I kind of love the way that you said it. This is one policy you're going to exercise or use, right? And you know, people as humans, we don't want to talk about death.
Correct.
But it's inevitable, right?
Correct. Absolutely.
And so let's dive deeper. I'm familiar with life insurance. Sarah and I, even our kids have it, and we have a combination of term and whole. So why don't you explain for our listeners just basic term insurance? What is that?
And I kind of like, again, to go back to the analogy, term has no cash value. It's like renting. At the end of your lease, you either renew it or you don't, but there's no equity that you've built up in that place that you're renting, none at all. So you're buying the protection to keep the roof over your head, no equity, no cash value. When you have a whole life or one that builds up cash value whole life or term, usually the premium stays solid or level. So if you're paying $50 a month when you're 16, you're going to pay $50 a month when you're 36, 46, 56. It won't ever go up. Where you're renting, it's going to go up every 10 years or 20 years or 30 years.
And so what I know about term is it's for a set term. And let's just say 30 years, that's your term.
Mm-hmm.
So if you started at 16,
Mm-hmm.
it's guaranteed until you're 46.
Correct.
And then what's guaranteed is the premium and the coverage.
Mm-hmm.
And you're right. It's like renting, and then your premium is based upon your age, your health, if you're rated at all.
Correct.
Obviously, the younger you get it, the better.
Correct.
And also the premium, right? How much do you want to be insured for?
Correct.
$100,000, $500,000. Obviously, the more coverage that you have, your premium is going to be higher. So, term, I think I have one policy. It's $300,000. It's like $46 a month. Very inexpensive.
Right.
Yeah.
Right.
And then why don't you elaborate on the whole? You had other names for it. And again, that's kind of your industry. I know it as whole life insurance, where it does have a cash value and things like that. Maybe you can elaborate.
I'll elaborate on the whole life / because there's different animals that have morphed out. And going back to the term for a moment too, because the policies used to be like a Ford the original Model T Fords. You could only get it in one color and it was black. Same thing, term used to be real basic. There are some term policies now that are called, an acronym could be ROP, return of premium. So over a period of 30 years, you pay that, you can get all your premium that you paid back. You won't get any growth, but you'll get the premium back.
Got it.
Those types of policies didn't exist like 20
And there's
years
all
ago.
kinds of hybrids. So I'm just talking on the basic level of all of these.
Right. And on a universal life and or whole life, they have cash value accumulation. So going back to what you mentioned earlier, so when you own a home and you're 10 years into it, you have equity that you can pull out if you want to. And that's what you get when you have a policy that has accrued cash value. And also the rate won't ever go up. So if you bought it at $40 and you $40 a month, it's still going to be $40 a month, whether you're 26, 36, 46, whatever age that you might be.
And I started the girls, they were young when I started with the policy for them.
Mm-hmm.
And that's, what we have for them, as well as Sarah. And
that was very smart. We started plans on both of our kids, Garrett and Morgan, when they were 0 years old. So they have plans now that they're 29 and 30. They still have plans that we're paying. I need to turn those over to them now that I think about that.
Next dinner. Here's your bill.
Yeah, here's your bill. And the plan is now owned by you. But that way, so they're still paying the age rate of 0.
Yeah.
So, and the one thing we were talking about life insurance in general, though, sometimes the more you get, it will be more expensive, but they also give you a discounted rate, like going to Costco. If you buy, like, say, $250,000 above, then it's actually less expensive. But when you buy less, you're going to actually pay a little bit more for the cost for that life insurance.
Gotcha.
So sometimes it's a benefit to buy in bulk because you'll get a discounted premium.
Right. It's like mortgages. We have a minimum loan amount, and that's predicated because there's fees incurred to do a loan, and there's such thing as a high cost loan. And, at the same time, if we're doing like a $50,000 loan, I can't even originate. It's too small.
Right.
But even if you charge 10% interest on a $50,000 loan for 30 years, we're not making much money. No. It's not worth our while. No. So there's they call a loan level price adjustment, or a little add to the rate where I get it. If the loan's over $250,000, over $400,000, then they give us, some discounts built into that.
Exactly.
Yeah. Mm-hmm. Yep, I got it. I get it. Well, it's good. It's good for, our listeners that don't have, and, people think, hey, I don't have a lot of assets. I don't own my home yet. As you said, I think the earlier you can start out, those premiums are so inexpensive that it's not a major liability each month or year. The sooner you can get started, I thought of it as, hey, as soon as we had kids, even without owning a home, or, it's like, what if, right. And it's not really what if, because it's when we're all going to pass away. And, I'm self-employed, and, even though Sarah works with me, it's based upon my business. She does the marketing for the business. And so it's like, hey, without me, there is no revenue to have this business. We've got to have some life insurance on me.
Right.
We've got to have it on her and, having the kids. So, I mean, it's in our plan. We have, life insurance, we have wills, trusts. And then as you acquire assets in your house, your net wealth is 40 times higher by owning a home. And that's like across the nation, it's minimum that where, your net wealth, that adds up quick just by buying a home, that it's an asset. Yes, it's shelter and it's a home and it's all these things, but it is an asset that grows in value. And, we could laugh. Our grandmother paid $5,000 for a home back then, but it's
in the
worth
cornfields of Illinois,
worth $1 million today. Like, right. That's an asset that grew very, very large. And, fortunately people have done well in that. And so it's protecting yourself. It's protecting others more or less. And that's how you protect yourself.
Absolutely. And one thing that you brought up, because you're self-employed like myself, not just having life insurance for your family members and your loved ones, but I have key man life insurance on me, because if I'm not working, if I'm gone, my team members, they're going to be out of a job. So there's policies in place where they'll get money so they can continue before because they're integral to my business. Yeah. That's one of the benefits that I've done, where sometimes you do key man policies when there's partnerships and there's contracts between two parties if they own it as a partnership, and you do a key man policy so one person can buy the interest out for the other one. And when you asked me about law school, there's a tie-in on that. One of the things I got was a plan that had cash value accumulation. And the reason was, as I mentioned, it was my mom raising four of us. I knew I'd have to go to college and law school by working and getting scholarships and grants. So I actually had a policy that had cash value accumulation. So I went into that plan several years later, and I had about $10,000 accumulated. Oh, wow. So I took that $10,000 out as a loan against the face value and used that to help pay for law school. Wow. So there was, until this day, then moving forward, I even used money out of there and borrowed against the face value when I opened up my Statefarm office. So having that policy has really paid back. Yeah. Not just for the fact, and if I had died in the interim, my mom would have had a nice little chunk of change that she could still be able to handle. She'd have some financial security, we'll put it that way.
Wow. We have so much in common. As I'm just thinking of questions, with you, it's like, I call it independent contractors, where we have our own business, and yours is insurance, mine's mortgages. But then we also identify with companies that we work for. And obviously you want to work with a good company. And it's kind of twofold. I mean, ultimately, I want to brand myself so people think of me, but it's also who you're with is so important.
Correct.
And I mean, I've been doing mortgages about 24 years. This is going on July will be 22 years with American Pacific Mortgage. So my time with them has been, a majority, 90% plus of my career. And it's not that they've been perfect, but it's like their values align with mine, right. And their credibility is very strong, and what they do, and they're receptive to feedback when we have growing pains. The mortgage industry is difficult at times. We have huge expansion overnight and major contraction overnight. Yep. And so you have to have those fiduciaries that are willing and able to make those tough decisions of when do we lay off, when do we hire, how do we maintain good employees through the different evolutions and cycles. And that's kind of what real estate's been. And talk to me a little bit about your tenure with State Farm. I mean, again, they recruited you back in your college days, and you're still a State Farm representative.
Right. Yes. Kind of going back to, like you said, I would say State Farm, in my opinion, the good neighbor component, maybe it's because they came from, Midwestern town in the cornfields of Illinois type of thing, but they are a great company to work with. Number one, you can have those tough conversations, and sometimes they are one-sided, as I'm sure you're aware. Last spring in 2023, it came out that State Farm in the state of California from State Farm General Company put a moratorium on writing brand new homeowners, condos, renters, anything that the general company owned, including commercial auto too. So it's a freeze. And that was the end of the, they said, we need to do this if we're going to be financially forward successfully, and not just for the next 1 to 2 or 3 years, but 10, 20, for the next generations with an S at it. We want to keep that stability and continue to grow. And as you research State Farm too, you saw like we're the number one property and casualty carrier in the U.S., not second or third. However, in the state of California, these products are owned under State Farm General Company, and because of how the structures are set up in California, it's been very difficult, as well as catastrophic losses and inflation. And you are in the mortgage business. I mean, it was like hot pancakes for you a while back there when it was like interest rate 2% or 2.5%, right? And then, right?
Oh yeah.
Yeah. So
it's I like to be kind of open-minded, because when I first hear, and when we all first see a news flash, and I think the media is so good about this, of like just getting us worked up quick of these headlines, State Farm pulls the plug.
Yes.
You're kind of like, why would they do that? And then, I just watched this video. I've been reading articles. The video shared and put it kind of in context to me is when they wrote the Department of Insurance or the state of California, whatever entity that manages them, it says, hey, we took on an extra, I think I'm putting it into words here. Their growth was 3% over a certain X number of years, and 3% of market share was significant of how many new policies and how much growth they took on. In gaining 3% of market share, and I don't know over the time period, it seemed like it was over the course of a few years that they gained that. Mm-hmm. They lost 70% of their assets, meaning that the new business that they took on, the new growth, was bad growth.
Right.
It had a high cost to it. And that's where, putting it into context, why did they pull out? Is they had to secure their assets that they had remaining, because at the pace that they were going to continue, you would go bankrupt or insolvent, and you just, especially for insurance, the worst thing you want to do is get downgraded on your ratings.
Right. And we're going to correct. We didn't pull out. We put a moratorium. State Farm's had probably 3 moratoriums in the past 30 years in the state of California. Yeah. They had one shortly after the Santa Barbara Painted K fire, where they said, we're putting in a freeze. We're not writing new. I want to say it was homeowners, but it could have been renters, and that we're just putting a freeze. This is probably the most draconian freeze since I've been a State Farm agent. Then they put another one in, shortly after the Santa Barbara T and Jesucita fire, and it wasn't necessarily based because of those fires. There were a lot of losses throughout the state of California. Paradise, the Malibu fires, the list is long. So they said, but they were moratoriums. This is another moratorium, but it's everything that falls within State Farm General. All states stopped writing homeowners in the state of California almost 3 years ago, and no one said boo. But when State Farm does it, everybody's like, suddenly you have attention, and you get these rumor mills that come up in the media. There was one out there, it was on a San Diego news station, saying that State Farm was doing it by zip codes, and that was completely inaccurate. So we are writing business. We're just not writing certain lines right now. We are pulling out in a couple. We will be non-renewing all apartment policies, and we are going to be getting out of that line of business. So there's some lines of business, individual lines, that are owned by the general company. So we won't be writing any more of those moving forward. Yeah. And that would be an accurate statement. Yeah. So. Yeah.
And it's, think of it, I see it so aligned with mortgages. We have to take on risk, right? We write new loans, you write policies, and yours is that what if there's water damage? What if there's a claim? Ours is, what if they fail to pay?
Right.
We still have to pay, right?
Yes.
There's still a debt on our books that we have to carry.
Right.
And so it can sink the ship really fast. And obviously the more claims that you have, the higher defaults that you have. And so in the mortgage industry, our out, I would say, is that we have loans that we underwrite to a common carrier, and we'll just say conventional loans, it's FHA, or excuse me, Fannie Mae or Freddie Mac, and they call those the agencies. All lenders underwrite to the same guidelines, so if we need to free up capital, then we could sell a loan because it meets the next bank's guidelines and the next bank's guidelines. If we start doing these one-off loans, and I mean, there was so many things compounded that led to the foreclosure crisis in 2008 to 10. But one of the compounding things was these fly-by-night guidelines. It's like, oh, you're going to put 3% down, we're going to allow 1% down. You're going to allow that, we're going to allow no percent down. And so is the competition that you were creating your own fly-by-night guidelines, and then when times get tough, you have a non-sellable loan. That's what we call it. And then that is money that's on your books, and that could sink you fast. And many banks have done that. And so we've learned from that, but it's also very similar that I'm hearing is like, there's loans for all walks of life. I mean, if you have a 550 credit score, which is not perfect by any means, there's still loans out there for you. Now, we don't necessarily want them on our lines, but we will broker and get you in connection with that. And that's what I'm hearing with some of the products that you have. Maybe you just, it's one thing to do a little bit of everything, but it's kind of better to be specialized in what you do. And so like if apartments weren't your thing, there's other carriers that it is their thing, and maybe you can just partner up with them to do that. So.
Right. And State Farm agents, we're independent contractors, and we're also one of the unique animals on the planet. We're called captive agents. So we're not a broker. So we can't, what we do, and what we do, a lot of the State Farm agents do this because we still get calls because we have reputations, like you mentioned earlier, where people trust us. Yeah. And they'll say, hey, I'm getting canceled, or I'm buying a house. We have a ton of real estate referrals that come in, and what we're doing is we especially when they're personal referrals, are saying we'll put you on the list. When the door reopens, you'll be one of the first we'll contact. And in the interim, these are people that we know personally and professionally. We give them 3 names and reach out to them in the interim, and they all happen to be brokers, because brokers are like Baskin-Robbins 31 flavors. They have 31. I know you had Ben Sudduck on here. Yeah. He's a broker. Yeah. And I know Ben personally and professionally and trust him as well. So that would be somebody, I would refer out a commercial and or personal lines, because he used to do both. I believe he still does.
And that's with what we do in-house. 95% of, that's our target, is to do in-house loans, between 90 to 95% of it. But we understand that there are opportunities and needs, and so we do have the capability to broker out. And so, that again, going back to my example of the 550 credit score, hey, I can get you a loan. It's just not going to say American Pacific Mortgage on it. But that's where you have our service and, quality. It's the, people come to me to do business. Hey, if I get a loan because of the American Pacific name, that's great. Right. I don't know that I do. I feel it's because of the work that we do. And
exactly.
So, it feels good to still be able to help them, or at least guide them in the right direction for that. And can't help everybody, but we try. I mean, that's back to our humanitarian stuff, right? We're always trying to help people.
I completely agree. And actually, a lot of State Farm agents in the last couple of weeks have had to make some tough phone calls to let their insureds know you're going to be non-renewed. And however, we're a resource. And if you'd like this information, we're doing this because we care. We're being good neighbors. Here's at least 3 different sources that might work for you to fill that gap while State Farm's not there.
All right, we're gonna dive. We're gonna dive in. We're going. We're going.
We're not gonna die. We're gonna dive. Okay,
we're diving. We're diving into homeowners insurance. Okay. And so, it's been a hot topic, and I think I say that frequently of all the shows that I have. Oh, this has been a hot topic. Insurance used to be in the process. In the beginning, they find their home. Okay, it's on your to-do list. Get me an insurance quote. And we were casual about like when you needed to get that back to me.
Right.
Now on day one, it's like, of anything on this list, insurance is
Number one.
This is our side pep talk. Go get insurance.
No.
So just in a nutshell, without going crazy, what's going on in insurance? Why is insurance difficult to obtain right now?
Well, that's a difficult dictum when you tell me not to go crazy. I'm not sure I can fulfill that commitment. I'll try.
Okay. Yeah. I mean, why is it challenging? Can you get a quote in a day? And I'm hearing people, they have to check with the underwriters and it can take 10 days. So there's obviously a length of time. It's more challenging to obtain.
Because the resources to actually be able to get the product are thinning out.
Okay.
Because again, like I mentioned, Allstate stopped writing almost 3 years ago. Other companies have stopped writing and or left the state of California. And it goes back to Prop 103 that was passed back in 1988 in the state of California, where it was looked that that's going to be able to save people insurance premium. And it had some good pieces of that proposition, but now long term it's come back because it didn't create a free marketplace for the insurance industry. So now what you're having, kind of what you alluded to before with your analogy with interest rates and how, well, you can't do it with Pacific Mortgage, but I can get you 5 because of your credit ratings like that 5. So in the insurance industry, if you're spending if you're only taking in $1 and you're spending $2, that financial model is not going to work. And because there were so many catastrophic losses in the state of California, Statefarm's we now have become rate inadequate between all the catastrophic losses, between the cost to rebuild and inflation. I mean, all of these things have come into play, and we're rate inadequate. So we've put into a game plan. We're going to clean up the book to things that have cost us more money from a liability standpoint. And we're going to limit our writing. So we're moving forward. That's where we're at right now.
Now, some of the things, again, I'm in my field and we're similar in a lot of ways, but I know enough to be dangerous is what I'm trying to cover my butt here with is I hear a lot, right? Mm-hmm. It's because my clients are coming back to me and saying, I need to put a water valve on my home and then they'll insure it. So I understand claims are at an all-time high. And then when you have a fire, it's not just one home on the block, it's the entire city, right? I mean, there's a lot of variables here, but it seems that in the last 5 years, especially, I feel that up front, insurance companies have done a lot more diligence in writing policies, meaning, somebody calls you, they want a quote, you quote it out, but then when you actually write the policy, whether at that time or within the next few weeks, they'll go do a home inspection.
Right.
And then they go, okay, we need you to cut back this trees, we need you to replace this roof. Was that not enough, or that didn't mitigate enough of the risk? I mean, it seems like the prevention is the only way to really kind of like get things better, because we're going to dive into the other part of this where we've gone, which is the California Fair Plan. But before I open that box, I want to kind of see, what are thoughts, and, could be your own thought. You could tell me to fly a kite, but I'm just like curious, or what are some of the preventatives that we could do to mitigate that cost? How do you get it? Again, you can't spend $2 and earn $1. How do we get the cost down, or better at vetting which properties?
And that's part of what's come into play too. And back into what you're saying, like preventative measures. And I'll speak for the State Farm agents. When we did insure things, we had to go inspect them. Now inspections are done by a third-party vendor, and they'll go out there and look at it, and they'll say, you need to get that pine tree removed. It's 2 feet from your house, or you need a longer defensible fire space, whatever. And they've actually, in Sacramento, they created, which is a good thing. When going back to what you were saying about defensible space, you can actually create a district, and that will lessen your insurance costs. But there's a lot of markers that you have to check off to be able to qualify as a quote unquote fire defensible district. Yeah. And that saves you insurance premium.
Right.
Number one, and it makes you So it makes something it makes something not as costly, and that will also benefit because now that risk isn't as high as being to burn down.
Yeah.
So all of those things can come into play, and we're seeing more of that. And that's one things insurance and companies, industry has been working with in Sacramento is let's create a more defensible fire space around areas.
Yeah.
And in turn, we can pass a discount on to consumers for doing that too.
I have a second home with Sarah up by Yosemite, and my personal experience, and I'll kind of just share the evolution of what's going on here. I feel like the insurance companies are just like, let me walk you through it. Second home, it's in a planned unit development. So it's a single family residence, but we pay an HOA fee for a guard shack and amenities.
Right.
24/7 security. I could call them at 2 a.m. and say, hey, can you drive by my home? Can you go personally? They'll get out of the car and walk, make sure all the windows and doors.
Right.
So there's somebody on site at all times, even if I'm not there.
Right.
Because we're on a private lake and because of the location of our home close to the lake, like there's a creek that flows through my backyard that runs into the lake, and there's a boat launch half mile down the road from my house. I'm very close to the lake, but that offers me where we're not on septic, we're actually on sewer. We have fire hydrant. We have a lot of safeguards. Now we're in the mountains, of course, up by Yosemite. The HOA has strict requirements that we have to adhere to CAL FIRE's fire plan for homes, where, zero weeds
Right.
up to your home. There's a 10-foot line, there's a 30-foot line, and then, it's what you can store, what you can't store. We have to follow that year round.
Right.
Okay. So I feel like if you were to say, oh, I live in the mountains, you'd be like, ooh, that's a high risk. Now,
That's the sound I make. I go, ooh.
no, exactly. But knowing that I have a fire hydrant across the street, I have 24/7 security maintenance.
Right.
We maintain year-round our property. We're a neighborhood that is all like-minded. Like we're all forced into that. So it's not like my neighbor, he doesn't have to follow those guidelines and he can grow brush that's 2 feet tall
Right.
and easier to catch on fire. No, he has the same defensive space that I have. It baffles me that I've been subjected to, and here's what's happened. I got in when we bought the home, insurance was $700 for the year. Then it went to $1,500. Then it went to $2,500. Then it went to $3,000. Then it went to $3,500.
Right.
And last year we got a non-renewable notice.
Okay.
Okay. So on my non-renewable notice, it was an email from the company, and I'll name it Home Site by Geico.
Okay.
Okay. It was an email from somebody, and it says, "Hey, we're not going to renew your property," and it gave a reason, and the reason was from an inspection report.
Okay.
So I was like, "Well, I'm very defensive of my property because you can ask my wife. The minute I get to the property, I'm out there with the blower or on top of the roof blowing off the pine needles to make sure prior to even going in the house. Like, I mean, that is commonplace. So I'm very protective and defensive of my property because I know I adhered very strictly to these rules. So I'm like, what could they have inspected that I did or did not do? So I reached out to the gal and I said, I called her. I actually called her. It was from a personal email. And so I just said, hey, it says, because of an inspection, I'd like to get a copy of that inspection.
Okay.
She said it just like that. Okay. And then she goes, well, I'm going to be honest with you. I don't think we actually did an inspection. I go, wait.
My.
So the reason you're telling me that you're non-renewing is an inspection, and you never did an inspection.
Wow.
And she goes, well, the actual reason is because you're in a fire district or, high fire rating. And I know that they rate different areas. There was a fire up there. I couldn't tell you the year, probably
about 3 years. The one up by Yosemite about 3 years ago.
There's a lot of, Yosemite's large. So it's like how close to, there was one that was actually close to us within a few miles. and evacuations occurred, et cetera. I'm going to say 4 or 5 years ago. Okay. Now, what I also found out is if there's a fire, they can't non-renew you within a time period. So I think it's at least a year after the fire that they have to renew a policy.
Okay.
But then now they've issued a non-renewal, and finding insurance has been quite challenging.
Yeah, I bet it has.
So that's leading us into the California Fair Plan. Oh my goodness.
Dun-dun-dun.
Yeah. So, I mean, in this, I mean, is there anything that I could have done? Do you think there's other carriers up there, or it's just because of the locale, this is what's going on in the industry?
You said it because of the locale. It's what's going on in the industry. That's the bottom line. Yep.
Yeah. And again, on the surface, I can see a mountain region, but it's like the more you learn about this mountain region, and I thought just, because on the forums for this home, they're on Facebook like crazy.
Right.
People have talked about, used a terminology, you create not a neighborhood, but you create
the fire resistive districts.
That's it. I thought as a whole, our HOA should be a good form of the district, but they're actually saying within our HOA, because there's 3,000 homes in this HOA, that you need to create a district within the HOA.
Yes.
So I don't know. It's just
that might get you an opportunity to be out of the fair plan. Some companies might consider that would be enough, and then that would give you that as an option.
And then my understanding was new to the fair plan is that they are going to offer a discount or two, and I think that was one of them. There was like 2 reasons, and I don't recall. I saw one place, and I've lost my notes on that. Are you aware of any discounts that they give?
For that the fair plan does? They could. I'm not that familiar. No.
Have you written many policies with the fair plan prior to the moratorium?
Because my office started in Santa Barbara originally, so that's where it was for the first 15 years, and there's areas up behind Montecito, Mountain Drive, and as you know, when you're going up past San Marcos Pass, that's the only thing that was writable would be in the California Fair Plan. And I wrote Fair Plan quite a bit back then. But there was also, then you had the Santa Barbara T fires and the Jesucita fires. A lot of those homes that were lost were in the areas where people had Fair Plan policies. Yeah. And Fair Plan, it was, it's State Farm, and working with my State Farm claims people, smooth. I'm not throwing anybody under the bus with Fair Plan. Yeah. Just a whole different village. And so we don't write a lot of Fair Plan.
Okay.
On purpose.
Yeah. I mean, and that's part of.
I mean, it's just, a lot of times it's been courtesy to friends or personal referrals because that's their only choice would be the Fair Plan.
Well, what's crazy, and I'll go even full, not only do I experience it firsthand by owning a home that's now in the Fair Plan, that's how I first knew it. I knew it as mountainous homes. But now, again, writing mortgages here in Ventura, I'm getting Ventura homes, I'm getting Santa Paula homes, I'm getting Camarillo homes that are required to have the Fair Plan.
Absolutely.
And it's becoming more of an everyday practice, not the exception or I know somebody that has it.
Yep.
It is now kind of protocol. And this is kind of, as you explained before, there's more and more carriers getting out of
the market, and so you have fewer options. Right.
When you have no options, you're stuck with the California Fair Plan. So I thought it was and I'm gonna read a little blurb off their website because this kind of all blew me away. I thought it was something created by the state 5 years ago.
Right.
They've been around 1968.
Yep.
Blow my doors off. Okay. The California Fair Plan Association was established to meet the needs of California homeowners unable to find insurance in the traditional marketplace, meaning you got no other options, you have an option.
Correct.
The Fair Plan is not a state agency, nor is it a public entity. There is no public or taxpayer funding. That was new to me. I thought it was. I assumed, and bad for assuming there. The Fair Plan is a syndicated fire insurance pool comprised of all insurers licensed to conduct property casualty business in California. The Fair Plan was established by statute in August 1968 as an insurance placement facility. So basically, you got a pool of insurers that are funding us as last resort. I don't know how truthful it is. I just read that because it's become so mainstream and the go-to
Right now, that is correct.
they're basically one massive disaster away from insolvency. And, how true that is, I don't know. I haven't looked at their books.
Right.
But when you have more and more carriers exiting,
right. And
concerning.
Their choice of no, as well it should be. And hopefully things will change in Sacramento in a better direction to open up the marketplace. And as you're familiar with the FAIR plan, because you're walking that not just in addition to the coverages that you have available, you have to pay for everything that's extra.
Yeah.
Like with a homeowner's policy that you would have through Statefarm, you're going to get burglary and wind damage and in addition to fire. And then you don't have liability that's included. So you're going to have to pay for a separate policy. So you're paying for additional expense.
And then further, it says the FAIR plan has not been rated or evaluated by AM Best, meaning they're not rated. And that's, something to think about. And again, this is mortgages and insurance. You and I are so similar. I think there's a lot of people that instinctually just want to shop about price.
Yes.
A wise consumer looks at the actual value. What are you getting? Why is this policy $2,000 and yours is $1,500? Well, easily it could be deductibles. Easily it could be dwelling coverages. But bottom line, even if they were the same coverages, same deductible, and one is $100 more expensive, but in lieu of an 800 number on the East Coast, you have a local agent that is in your town that's able to come to your property, that's able to review your coverages annually. These are those differences that I encourage everyone to kind of look beyond. It's really do your homework when you're shopping around for insurance, when you're shopping around for mortgages. It's, to save $50 or $100 here or there, I get it. It's tough. Everything inflationary is coming up higher and more expensive. I'm going over my utilities
No, you're right.
But at the same time, the convenience, the headaches that you'll save yourself if there is an issue, it's well worth that price. And that's where I'm going with that. And then, again, going with, and I think the moral of my point was you have an A-rated company of State Farm. These companies are rated by how quick they come out, how they deliver on what you're paying for. There's rating and there's standards for that. When you have a last resort that they're telling you they're not even rated, that should be concerning to all of us.
Right.
Yeah. Now, with the FAIR plan, and I think I've kind of shared, if there's last resort, you said it well, it just covers fire. So if there's theft at the house, it doesn't cover that. It only covers
You have to
the
add
fire.
all those coverages.
DIC, difference in conditions, is the policy that I've come to know it as.
Right.
Please elaborate on what that is.
Since I really don't work that field, I'm going to...
Well, okay.
It would be to add those coverages that aren't coming
And that's exactly
through the FAIR plan.
Right.
Is
So
simplistically stated.
that's all I needed.
Okay.
So there we go. So if you have the FAIR plan, more or less, most people are opting, and they should choose anyways, to come out of this with two different plans. You're going to have a plan that says the California State Plan. When you sign up for it, and I'll tell you, it's not an overnight gig. You can't call them on a Monday and expect to get your policy on Monday. They want photos of your house.
Yep.
With front of the house with the address, back of the house, both sides of the house. So you got to send them photos. Then they're going to underwrite it, which most policies do. And then they're going to come back with a quote, and then you agree to it, and you need to have a policy in place for our loans. You need to put out of pocket. Now, historically with insurance carriers, I found that you didn't always have to, we could bill it to escrow and some things like that. The minimum down payment, my understanding, is 25%. So you need to pay with a credit card, and they're going to charge you to use a credit card, versus
another
check.
Fee, right?
Another fee, exactly. So you're going to pay a portion of that just to get it started. And then additionally, you're going to get more than likely a DIC policy, difference in condition. So if you do have theft or personal liability, which we highly recommend,
Right.
then you should get that. And that wouldn't be with the Fair Plan. That would be with State Farm, Farmers, AAA, like whoever's writing that policy.
Right.
Ultimately, you'll have two different policies. So it's kind of weird to understand, but for those out there that need it or purchasing a home, I think as you're viewing a home, especially as first-time home buyers, be very conscientious of when you're looking around. They say the number one thing in real estate is location, location, location.
Yes. Oh, more so now than ever before.
That applies to not just financing it and the value of it, but also the insured value of that. And I've seen, you're from Santa Barbara and Isla Vista and all that.
Yes.
The street that is on the Playa Sabado Tarde.
Okay.
Isn't that the oceanfront street?
Right.
And half of it's eroding away, and I'm seeing that these no longer have backyards,
right.
and you have balconies that you can't even use anymore.
Right.
Like that would be a very high risk, and I'm using an extreme example here, but it's like if you see something, if you're surrounded by dry brush, or your backyard is a mountain,
is about to go in the ocean, or you're sitting near a creek or by Mission Creek or something over in Santa Barbara, you're going to have. And I know that some of the regulations and or rules for real estate agents have tweaked a bit, which is a good thing in this regards because some people would be looking for a house. They'd say it was downtown Ventura, but then they go by in the hills of Ventura and all of a sudden their premium for a homeowner's insurance, they were used to say $1,500 a year. Now it's $10,000 because Fair Plan is their only option. Nobody else is writing, and they had sticker shock. So now if you're potentially, or you're sitting in a riverbed or near one, and your options again will be California Fair Plan, and then on top of that, you have to get a flood policy. A lot of lenders won't do it because they're like, no, you're in a flood zone. You're going to have to pay that additional cost above and beyond everything else. Yeah. So now consumers, I think that was a good thing because most real estate agents, just from anybody actually, from a visual look, can see that could be a fire area or that could be a flood area. You can just kind of get an idea. And then to be aware of those extra expenses, not at the last minute when you're about to close.
Well, and we need to know that for qualifying.
True.
So much like, I just lent on a home in Granada Hills, Northridge. I do a lot of lending in that area. It's very similar to the hillside of Ventura, where you have Poli or Foothill that are up the hill. The quote, you just said $10,000. That's what their quote was, and that's not outlandish.
No.
If you look at the risk and the location of it, well, that home 5 years ago would have been $2,500.
Right. That's true too.
And so we have to take that liability, that $10,000 is part of the PITI, principal, interest, taxes, and insurance that we qualify you on. And so as insurance has gotten higher, it's not just mortgage rates that are getting higher, the whole overall payment is getting higher. It is tougher to qualify for some of these, I don't even want to say unique properties anymore.
No.
Just
not unique at all. I mean, our home insurance went up too. And in that from a humanitarian piece, if you will, I feel for the people too, because some people are on fixed incomes. And if you were budgeting $1,500 a year, and that's what it's been for the last several years, and now you have your premiums $5,000 a year.
Oh, yeah.
I mean, some people can afford that, I'm sure, but there are people that's going to be a tough one for some. Yeah. I feel for them.
Yeah. So any idea with the moratorium on new policies? I mean, timeline, anything like that on?
Don't have that crystal ball yet.
Okay.
So I know this will, at least for State Farm, we don't see anything happening like the moratorium being lifted anytime in 2024. I would venture to say that.
So somebody calls you right now. Hey, Irene, I'm buying a home. You just
put them on a list and give them referrals.
Is there certain areas where they are, or this is all of California? All
of California. If the product is owned under State Farm General, because like we have State Farm Health, State Farm Mutual, State Farm Life. So if it's a product that's sold by, because when we were having conversations with the Department of Insurance, it was everything that it wasn't like only parts, anything owned by State Farm General. So homes, autos, business policies, apartment complexes, condo association, homeowners associations, commercial auto, that all falls under under our State Farm General company. So the moratorium, we haven't heard about anything being lifted in the near future. Let me put it that way.
Yeah, gotcha. And that's got to be tough. I mean, tough not to help people, but then also financially, I'm sure there's a hit to
financially,
that as well.
because
Yeah.
we've always been, our office has always been a very solid property and casualty writer for homes and condos because of relationships. Real estate agents and loan people send us a lot of referrals. So yes, and then we're losing business because State Farm's non-renewing it on that video sent over from YouTube, 2%. So we're taking a cut in income, some more than others. If you wrote a lot of commercial, our office also wrote a lot of commercial insurance as well as homeowner type policies. And so yes, some homeowners will be non-renewed, but there will definitely be all the apartment policies non-renewed.
We share a lot of the same struggles. I can't say that enough. And it's not that we've said no to doing loans in California, but when you have a 7.5% current interest rate versus a 2.5% COVID interest rate, and a $10,000 insurance premium, the needle definitely moves on, how many people you're able to help in those situations. And, I get it. And it's, we're both in a people person field. We want to help people. We want to satisfy people. Mm-hmm. And it's tough to say no, or, hey, I don't have all the solutions. And even looking into the future, when are rates coming down? When are you going to start insuring back in California? Right. We don't have all the answers. No. So we just have to work with what we have in front of us.
Correct.
Educate people as much as we can and provide hope that, hey, I hope one day it's going to get, much lower rates. I know they will come down. Mm-hmm. I'm confident they're not going to be 2.5% again. I mean, that was silly, stupid. And it started this cycle, right?
Right.
I mean, so it's kind of what happens is us humans, we like to push it too far. It's you push it too far one way, then you push it too far the other way. And it's just like, it's nice sometimes to have a little middle ground, not take everything for granted, and just do the best that we can. So moving on in insurance, we've spoken enough about the fair plan. Very challenging. It's here among us. Insurance, as you come, again, you're in a purchase contract. Number one thing I'm going to recommend is start working on insurance quotes, because that's more important
sooner than later. Absolutely.
Yeah. So other insurance and just, a house in general, I still want to come back, and we had previously chatted just a little bit. Investors are very strong in, purchasing homes. And with that, it's a personal primary residence versus an investment property. They're two different animals for us. For us, it's a higher risk. And the way that, and why do we think that is, when people financially have tough times, they're going to let their investment property go before their primary residence, right? Your primary residence is your shelter, and that's the last house to go.
Right.
And so again, it's just a higher risk. So we see that as interest rates are higher on an investment property. Adversely, in insurance, a lot of times the premiums are lower. Why don't you explain the difference in a primary residence versus an investment property?
And I think you kind of touched on it a bit, because of the liability and the losses are bigger. They call it quote unquote pride of ownership. Yeah. So when you're living there in your own home, there's a sense of pride of ownership. You're going to take care of that leaky faucet or fix that loose stair. Yeah. And not to say that there aren't really good, diligent, responsible landlords out there when you have quote unquote investment property, but not always necessarily pride of ownership can always come into play. And there's more of liability issues. Someone comes and visits and slips and falls. Sometimes they obviously would name the tenant that they went to visit, but they're also going to name the landlord. Yeah. So you're talking about a bigger liability issue. So, who you're inviting into your home generally, family or friends maybe should be a little more selective in it, but you don't really know when you have like an apartment policy and then someone falls off a balcony. We've had crazy things all over the planet. And so the exposure is just bigger and have more liability potential and actually have liability losses all around, whether it's, you're rebuilding a 12-unit structure versus a single-family dwelling. So just from the cost of the construction alone, not even to discuss the liability issues that come with that particular product.
Right. The other difference is primary, you cover contents. You cover your couch, your TV, all those personal contents, whereas in an investment property, you do not. You leave that up to the tenant typically to
Normally.
have a renter's policy. And you sell renter's insurance. I mean, chat with us.
Moratorium, but we do renter.
Okay.
Yeah, it's in Statefarm General too. But you're right, and we do offer, even when you have investment property, you can still have personal property.
Of course,
sometimes people rent out their units furnished, or they have some personal items there, maybe a lawnmower, maybe the washer and dryer. So there might be some things that are there, and the landlord, if it got destroyed in a fire, he or she would like to have that replaced for them. Yeah. But yeah, renter's insurance is a great idea. And one of the things I always suggest with renter's insurance is that they go around and inventory all their contents, even when you have a home or a condo, room by room, because you'll be surprised on how much. If you had to go replace that, you lost everything in the Thomas fire, you'd be surprised about how much you could blow through to go buy all those 10 pairs of blue jeans, all brand new.
Right.
It's, all of a sudden, it's pretty expensive.
Yeah. Years of accumulation versus overnight and losing everything. I mean, I couldn't even imagine.
Yeah.
Oh, my
and
goodness.
it's good to go room by room, then do it. This room's $10,000 worth of stuff. This is go buy that couch brand new, that dining room set.
Obviously, we're in some inflationary years and coverages, whether it's your house or even if it's life insurance, you have a certain amount of coverage that you have. How often do you like to kind of get with your clients and say, let's do a review? Do you have enough life insurance? Have, any life changes? Are you having any more children? You have a home, you're covered for this amount. Maybe we should bump that up. Like, what's kind of some of the suggestions or recommendations you have?
Even since the day I opened my office, October 1st, 1987, one of the things that we looked at was doing insurance reviews from the get-go before it even became a thing to do. We always felt that it's important to do it at least once a year. So, we usually tagged it close to when your home renewed, like 30 to 60 days out. But some people don't own homes, but that was just one marker that we used to reach out. And then we'd say, would you like us to review once a year, once every 2 years, or not at all? We'd always make that an offer. And we have them come in, and because there are, like you said, life event changes. Maybe today you're single, tomorrow you're married, and 5 years later you have twins. So, and now you own a home, and before you didn't. And then what do you want to look for saving, retirement, coverage on your home? And then coverages change, as you're well aware too. So maybe what your policy had before, you don't know that there's all these different options and endorsements maybe that you need to consider adding to your policy that weren't something to look at in the past.
I have a self-omission here that it's
Uh-oh.
my auto policy. I think it was 10 years that I was insured, Sarah and I, as non-married. And married is one of the biggest discounts that you have.
Oh, yeah.
You're
married,
like,
multiple car discount.
Here's your bill, sucker, for not doing better. Ugh.
Wow.
Yeah, I know. I earned that.
You earned that. No, and then some people, and I think that goes back to what you alluded to earlier. I'm not throwing anybody on the bus. Do you want to talk to a lizard or a human being and meet with them and know that, this has changed. You're married now. Well, okay. Or sometimes you could be a registered partner and you can still get discounts.
Absolutely. And this is, again, where I'm going. The parallels in our industry, there's a lot of competition out there. And I know it's, you always want to battle for your value and show what you can do and, really earn that. But there's so many little things that add up in what I do, what you do, where it is worthwhile of getting somebody that can represent you.
Right.
And that goes a long way. And every time I've tried to go the cheap route, I've learned my lesson. I just want you to know that, Irene.
Yeah, I know. It's like, wow, how did that work for you?
Yeah, exactly. How did that work for you?
Yeah.
So, all right. any crazy stories you've insured for many moons? I mean, is there like some amazing stories you've showed up with a check with big money and changed somebody's life, or sad story? Anything you want to share?
I'll share two. One of them was when I was an agent for brand new agent, barely 2 years into the business, and I was single at the time. And I got this call from a referral to write like his big, huge mansion in Montecito and like a Rolls Royce, a Lamborghini, everything. And, I grew up in the cornfields. Got that, right?
Yeah.
And I'm sitting there going, and I said, but I had to come to his house like that. Like you have to be here by 5. He owned a bunch of properties and businesses in Santa Barbara. And I was like, 5 o'clock on a Friday night. I was like, okay, I'll go. And I wrote everything up, and he paid me everything in cash. I was
oh
like,
my goodness.
yeah, I mean, I was like, my eyes like, okay, like, I don't know, 15,000, it was
Can you accept cash?
Yeah,
currently?
well, that was, 30 something. Yeah, we have premium fund trust accounts. Of course, that went into the bank like immediately, but I never even held that kind of money in my, I was like, not check. He gave me cash.
Yeah.
I was like, that was one of my first ones. Like, whoa, I should have been more concerned about going to a guy's house I didn't even know on a Friday night.
Well, not just that, the cartel guy's house that you just went to.
yeah, and plus, we've been fortunate with the affiliation with State Farm doing like a lot of different nonprofit stuff and meeting people who are in various industries that I wouldn't have ever had the opportunity to do that before.
Yeah.
And that's always made me smile, because the company as a corporation does a lot of good in the community across the country.
Yeah.
And we've been able to hitch on that wagon whenever we wanted to, if we wanted to. And so that's been a lot of fun. There's just, whatever that might be. I'm just going to say the other thing too about being a self-employed woman, I think this has been a really good thing to do, because a lot of times I've been able to bring my children to board meetings for the Boys and Girls Club, or I bring them to the office. So having the flexibility also, as you're well aware, being self-employed, it's not a 9-to-5 job.
Correct.
Sometimes I would leave at 3 p.m. and go coach Villanova volleyball till 7, and then I'd come back and work until midnight.
You have to make up the work. It doesn't go away.
Have to make up the work. So, but it's been a joy.
Yes.
If nothing else. So, and I just being a good neighbor to us personally and professionally, like my grandfather. He was an instrumental. I might tear up.
No.
No, he was very instrumental, because it's like you should always be what you are, the same person personally or professionally. And I think, and we in our office, sometimes we don't get it right. We're not perfect. We don't walk on water. We don't always return calls within 24 to 40 hours. We've dropped the ball there a couple of times, but overall, on a scale of 1 to 10. My team and I were like family, and we're like 9.5.
Yeah.
So I can live with that.
And you know what? For somebody that says that they don't make mistakes, boo-hoo to that. When you make a mistake and you acknowledge it,
Yep.
you learn from it. And I
agree.
can tell you, if there's been something that you didn't get the policy bound that day, and it took an extra day, and the premium changed $50, you probably paid that, and you learned the best lesson ever to never
Right.
let that happen again.
Right.
And so we're all human at the end of the day. We are professionals, and there's a certain caliber of expectations that we all have.
I agree.
I find that it's okay to make a mistake as long as you own it and you learn from that. And the more you communicate, that's what makes a difference. If you look at 99% of issues, it's because the lack of communication.
Yes.
And so if you're just able to talk to your client and say, hey, this happened, but this is how I'm taking care of it. I've got you covered.
Yes.
I'm sorry. You shouldn't feel any inconvenience, but whatever the reason may be, they understand.
Yes.
And they're
Clear
actually
communication.
they're honestly going to respect you more because
agree.
you fessed up to that. So
I agree.
I've heard you. I've known you a long time. I've always known you to be an amazing, caring person.
Thank
and
you.
just what I've learned today from you, I don't know. It's just taken to that next level. And so I'm just so happy that you were able to come in today and share about your history, share about the insurance, and even share insurance is tough right now. And so,
Thank you.
like it's it is what it is. And so it's the message to push out there. Don't take anything for granted. Align
Right.
yourself with good people, and you'll get taken care of, and you'll get what you need. So yes.
I have to say, thank you for having me. You're a friend personally. I love you to pieces. I love Sarah. I love your whole family. And it's been an honor to be here, fun. And thank you for you. You do a lot. You've handled mortgages for both my husband and myself. You do so much in the community, and it makes me smile even when I think of you guys. And that's the kind of people you are. You're good people, and thank you for having me here today too. I appreciate it very much.
Thank you, and thank you all for
Great
listening.
guy for mortgage.
There we go. Thank you all for listening. We've got so many more shows lined up. We've gotten, hopefully you feel a lot more consistent. I turn the reins over to Sarah. She does an amazing job. She keeps me always looking good, and getting more consistent with shows like this where it's timely, it's relevant, it's things that we need to talk about. I think our next episode is about probate and wills and trusts and all kinds of crazy stuff, how relevant that is. So keep plugging in. If you guys have a guest or a topic you want to hear about, drop them in the comments. Please let us know. We want to talk about what you want to hear about. That's what we've got for you today. Thank you for tuning in to G Money, real talk on all things mortgages and real estate. Peace. We're out.
Thank you.